Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, September 26, 2012. And what I plan to do here is a quick video overview, sort of a follow-up to the video I did on August 26th, the overview of the top 10 holdings of the Nasdaq 100. And just want to take a look, see where we're at today, see how things have played out, and most importantly, where I think things are going from here. So let's dive into this. I'll try to keep this one short in time. We're starting out with Apple, which, as I mentioned in that video, is by far the largest holding, makes up over 20% of the NDX 100 or the Nasdaq 100. And everything is discussed recently, even more recently on the site. Since I did the last video, I've made a couple of static posts here. And what you can see if you follow the cursor up here, let's zoom in a little bit. On Apple, clearly we have had that wedge overthrow, which I mentioned, and I expected, as is the case, we've come back into the wedge, and if you look at the candlesticks and the selling in the last few days, they're impulsive. Again, it's been my experience when we see these bearish rising wedge overthrows, especially when divergences are in place confirming that bearish rising wedge, and it's expected to break to the downside, as rising wedges usually are, that when you get these overthrows, you typically see a pretty quick and sudden reaction, prices coming back into the wedge, and just as often you'll see them quickly break down to the other side, and the wedge, ultimately break in the direction that it was expected to originally. So again, something I'm watching for. Obviously, that's step one, that we've now come back into the wedge. We need to see this uptrend line, i.e. the bottom of the wedge here. We need to see that level go, and if we do, then I would say the odds are pretty good that the current Apple short will hit the first target, which is this level here, right about the 520, roughly 522 level. Okay, moving on. As you can see, and I just mentioned, we do have negative divergences in place down here. MACD, RSI. I've highlighted this chart before. I won't spend too much time on it. On balance, volume, money flows, volume, everything else is diverging as well. So to me, that clearly looks like a longer-term bearish chart on Apple. I think we have more downside to go. Quick look at the weekly chart. Weekly divergence is now in place. As you can see here, the MACD is turning down. It has yet to make an official bearish crossover. This fast line, the blue line coming down over below the white line, that will be another confirmation and a confirmed sell signal longer term on Apple, because again, we're looking at a weekly chart here. So if we see this MACD make an official bearish crossover here, it will have confirmed this divergence that's setting up right now, negative divergence on the MACD and RSI. That'll probably bring prices at that point much closer to this trend line, as well as the 40-week EMA. If you look here at the red line, 40-week exponential moving average is also a 200-day moving average if you're looking at a daily chart. And as you can see, that's done a pretty good job of defining this uptrend, really since this bull market has started back in early 09. So the fact that those levels come in together, that tells me a lot. In trading, if I see two pretty solid support levels line up, then the odds are even that much better if this level were to give way. Once again, this rising trend line and the 40-week moving average here. Okay, let's go ahead and move on to the next one, which is Microsoft. Microsoft, again, revisit the last video if you haven't done so already. I talked about this chart before, so I won't spend too much time on it. But last time, in the last video, I believe we were right here when I made these notes. Prices have come back to this key resistance line, where we've had several rejections over the last many years. This is going all the way back to late 06, early 07. And so far, as you can see, we've had some pretty impulsive selling off this level. Really too early to write off Microsoft at this point, since we're still in close proximity to that level. But as of so far, we've come off that level. And as I mentioned before, if you look at this upsloping line here from the prior peak high, reaction high in prices, to the current reaction high, where Microsoft did make another fake out, just like it did back here before the last bear market started. This sloping line against all the oscillators down below, MACD, RSI, clear negative divergence. Once again, something that helps me formulate an opinion as to whether a stock will break out of a resistance level, in other words, be a good long entry, or whether a stock is likely to fail at that resistance level, even if it were to make a brief break above, as we have here. So again, resistance can be a level to go long on a breakout, or it can be a level to short. And in this opinion, or in this instance, my opinion on Microsoft remains bearish, as I don't think the charts are confirming a solid and sustained breakout above this level at this time. I think we are most likely looking at a downside, considerable downside reaction off that level in the next coming weeks to months. Okay, Google. Okay, Google is the third largest holding in the NDX 100. As you can see from these blue lines here, we had a nice recent breakout, new highs, so that puts Google at all-time highs recently, which in itself obviously is a very bearish. I'm sorry, trying to talk fast here, folks, to get this video wrapped up quickly. That is a bullish technical event. Obviously, a lot of eyes, a lot of bullish traders watching Google. Undoubtedly, a lot of longs piling in lately. However, like just about every other chart we're covering here in the Nasdaq 100, we have some significant negative divergences in place down below that tell me that the odds of this new supposedly quote-unquote bullish breakout to new highs tells me that that's not likely to stick, at least not in the near term. More likely to be a bull trap. And what I did here on these circles, if you notice, we've seen very few powerful rips of this magnitude in Google over the last, in its trading history. And if you look at the action here, we had that very powerful rip up to new highs, and that happened to come right at leading into the top of the highs right before the bear market started in late 2007. And this rip here looks identical to me. So, as they say, beauty is in the eye of the beholder, and in my opinion, when looking at charts, bullish or bearishness is also in the eye of the beholder. Bulls would obviously take this action to be very bullish, and bears might say that looks like final late stage, what they call late stage buying frenzy. People afraid to miss the boat. A lot of shorts getting squeezed out and longs piling in just before the supply and demand dynamics change on the stock. So, that Google's yet to be seen. We have a little more work to do. We do have, this is a daily chart on Google. We did put in a pretty bearish candlestick yesterday, a potential topping candlestick. Let's see how the stock acts in the next few days. Google, don't have a strong opinion on it. It's not an active short on the site right now like Microsoft and a few others that we're going to talk on are. So I'm just watching Google at this point. But again, I would put the odds that we see some downside in Google before we see much additional upside, if any. Okay, moving on to holding number 4, Oracle. Again, all these were covered in the latest video. These are the same trend lines I've shown. Oracle has a pretty clear pattern of really parallel uptrend lines, and when those break, it typically leads to not just additional downside, but some pretty impulsive downside. These sell-offs are about equal in scope, and we've just recently had that breakdown. So once again, in my opinion, and the reason I'm doing this video is the technical evidence looks to me that this is more like the beginning of a much larger correction than an opportunity to buy the dip here. So let's go ahead and move forward to Amazon. Amazon is, as of the other day, an active short on the site. And I highlighted this large yellow channel. I made a slight revision since the last video. Either way, we have a nice parallel channel here, and this blue line is what I refer to as a sub-uptrend line, sub-uptrend within the larger rising channel, which we've had a clear breakdown. That's where I made Amazon a short on the breakdown of this uptrend line. And if I'm not mistaken, my first target is the bottom of this channel. which will probably come in. We have some decent horizontal resistance around this level, so if the channel goes, then we might be looking at some resistance there, and I think I have the next target over here. In fact, let's see, no, not listed on this chart. One more thing to mention about Amazon, by the way, is the 318 PE ratio, stratospheric PE ratio, and if you know everything I'm seeing and believe to be true as far as the fundamentals for the U.S. economy go, things are getting worse and will continue to get worse from here, not better, and that doesn't bode well for a retailer like Amazon, especially with a PE ratio of 318. So I think enough said there. Weekly chart on Amazon. This was a bearish rising wedge, a pretty clear, well-defined bearish rising wedge, which broke down back in towards the end of last year. In my opinion, that wedge has not played out near what it should have, what the technical projection should be. And I often see this. I'll see a wedge breakdown. Prices will push back up, sometimes make a retest of the wedge up here at higher levels, sometimes continue on like this just to break above the previous reaction highs, this horizontal line, and where Amazon is coming back to retest that level right now. So that'll be a key level to see it hold. I don't expect it to hold. And again, divergences were in place on that wedge at the time it broke. If you look down here, I've extended this line out. We still have a divergent new high here as the MACD has failed to make higher highs along with prices making this higher high, as well as the RSI and some other indicators. So overall, another top 10 holding at the Index 100 looking pretty bearish. Intel, I did add this one as an active long recently on the site. Intel, overall the chart, the recent market action here recently, I should say, has been obviously very bearish. We had this long rising wedge, which almost made it all the way to apex, broke down, had a little fake out here. We've seen a lot of fake out moves over the last few months in this year with all the Fed intervention in the markets, but we did have a follow-up breakdown. Prices came back to retest at almost right at the apex of that wedge, and that's all she wrote. Since then, it's been a pretty ugly sell-off in Intel, which is holding number sixth largest holding in the NDX 100. I believe I put it on as a long here at the support level with a stop below this second support level. Prices have danced around that line for the last few days. Keep an eye on it. Of all the stocks out there, even if we break below that support, I wouldn't short Intel. I think a lot of that bearishness has been priced into the stock already. It's played out easily to its projection on this wedge. Obviously, if the market sells off hard, Intel is going to go down with it, but I think there's better opportunities out there. So I would not be entering a short on a break of this line. However, if you are long, you might consider to keep that as your stop if we break below that level. Weekly chart, this is going back, here's a downtrend line going all the way back to late 03. And as you can see here, Intel earlier, I should say later last year, had a nice breakout, very bullish action since, and prices have now pulled back. So if we focus on this downtrend line here, we have a little ways to go before the prices make a retest of that downtrend line. So ultimately, if there's a sell-off, Intel may be going that much lower. And again, that's why I would consider stopping out if we go much lower, because Intel could drop another point and a half from here. And this is a nice uptrend line which defines the uptrend off the March 2009 lows. And if we zoom in here, you can see prices are just under there. We haven't closed the week yet, so Intel still has a chance to rally up and close on or above this trend line, but a move below that would signify a potential new downtrend. Again, we don't have not a lot of touches here. We've had 1, 2. This is really the third time flirting with that trend line, so I don't want to put too much stock into this line, but that's the chart on Intel. Net, call it neutral on Intel at this point. Qcom is an active short on the stock. Highlighted this resistance zone up here, nice fat gap back here. I expected prices to stop at, which they did. If we zoom in, I think they went pretty much right to the top of that gap. which also completed this rising wedge pattern here. And we have since, prices have since broken below that rising wedge. We had solid negative divergences in place, helping confirm the bearish rising wedge pattern. And once again, we have not even come close to playing out what that pattern would be expected to, based on its technical projection. So we're looking at, I have my first target down here, second target here. At this point, I would say I favor T1, but let's see what the market does. Either way, I wouldn't be a buyer. I don't expect Qcom to stop falling for a little while here. Here's Qcom from a weekly perspective. We have this large bearish rising wedge. Same old story, negative divergences in place down below. And on this one we had a clear breakdown, tag of this support level, bounce to retest, second retest made, and now prices seem to be turning down. So this is just a from a longer term perspective, a rising wedge breakdown with a retest, and I would expect prices to continue down and probably before all is said and done, at the very least retest this level here and very possibly break below it. I'll keep this trade posted. Again, Qcom is an active short on the stock, on the site. Okay, rounding out to holding number 7, the top 7th largest holding in the QQQ. We're looking at Cisco, which had this nice gap up here, which got above this previous gap level. That is one heck of a support level. You have two gaps. Prices line up with here, and as you can see, Cisco appears to be losing that gap, and more often than not, when stocks enter a gap like that, the gap is quickly filled. So unless Cisco can make some quick turnaround, some type of stick save here in the next day or so, we're likely to see prices fall pretty rapidly down to the bottom level of both of those, or at least this support level here, I should say. So not looking too hot for Cisco. Let's take a look at the weekly chart. I talked on this before. I wasn't crazy about this head and shoulders pattern, but it is possible that's one larger, very large head and shoulders pattern setting up with a downsloping neckline. So we would just have to extend that neckline, and we'll keep an eye on things when it gets down there. If things do get that ugly, that'd be a pretty large move down for Cisco. Okay, holding number 9, Comcast. Highlighted this before. We're still well within that large bearish rising wedge. Like everything else, divergences in place below. And let's take a look at the weekly real quick. Highlighted this before. We have these RSI, rare RSI overbought readings when we get these clusters of readings over 70 level on the RSI on the weekly time frame. Historically, they've always led to, pretty significant corrections. This was the last bear market, preceded by these overbought readings. Since that, those readings we had in the middle of this bull market, we had some extended overbought readings, which then led to this very sharp sell-off here back in, mid to late 2011. And here we are again with some sustained overbought readings. So if history repeats itself, I'm not looking at a 2-3% pullback on Comcast. We're looking at something considerably more substantial in the coming weeks to months here. Okay, and for those of you who are still with me at this point, last stock we're looking at is Kraft, KFT. Here's a 2-day period chart going back to the bull market beginning back in March of 2009. This was the bottom of the last bear market, and Kraft has a nice, well-defined uptrend line since then. Still well above that uptrend line. We're not in jeopardy of losing it at this point in time, but like everything else, there are divergences in place below, and in my opinion, it's only a matter of time. This uptrend line is getting pretty long in the tooth here, so I expect that to go sooner than later. Weekly chart, I talked on this last time. I think I added these arrows this time to just help illustrate. You can replicate this on your own chart. We're looking at a weekly chart of Kraft with a RSI here, RSI 14 period, which is the standard RSI period. And I noted, typically an RSI reading of 70 or above is considered overbought. However, on Kraft, The magic number seems to be the 66.25 level, and I've highlighted here, added arrows every time that the prices or the RSI has touched or moved above that level. I've noted it with the white arrows, and as you can see here, you just may want to pause your video and take a look at it, but you can see that I think without fail, all those readings were quickly followed up by a significant correction in the stock, which we have not seen yet. We did have a reading right here most recently, and we have yet to pay for that. So do the math on it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 prior RSI 66.25 plus readings on here, every one of which led to a pretty decent correction. This probably being the most mild right here, or this one, but most of these are pretty significant. So history shows us you don't want to be long craft at this point in time. Okay folks, that's it, and hope you enjoyed the video.